Everyone thinks they know how to invest in Dubai real estate, but almost everyone makes the same mistake. They hear Dubai, picture luxury towers and private beaches, and assume the most expensive, most famous places must be the smartest investments. But here's the uncomfortable truth most investors never want to face. The places that look the best on Instagram are often the worst places to park your money. And once you actually follow the data, something surprising happens, because Dubai quietly pays back property value through rent faster than almost any global city analyzed, but only if you choose the right neighborhoods. And that "if" is where most people fail. Because when you zoom out and study the numbers, you realize something that completely flips the usual logic on its head. Many areas that sound impressive on paper simply aren't good for renting at all. Take Palm Jumeirah as an example. It sounds elite, it feels exclusive, it impresses everyone you tell about it, but in reality, many apartments there struggle to deliver more than around 3% rental yield. That's barely enough to justify the risk, and in some cases, it doesn't even beat inflation. Meanwhile, just a few minutes away, less glamorous areas are quietly generating double that return, sometimes even more. And that gap is exactly where smart investors live. And in this video, I'm walking you through 5 neighborhoods that consistently outperform the market when it comes to rental income. But here's the twist. We're not starting with the most obvious place. We're starting with an area most tourists walk right past, without realizing what it's actually doing to investors' bank accounts. Just across the road from Dubai Marina, there's a neighborhood that doesn't try to compete with Marina's image. It's further from the beach, the buildings are generally lower quality, and it doesn't have anywhere near the same concentration of high-end restaurants or nightlife. On the surface, it feels like the discount version of its famous neighbor. And yet, this area produces rental yields about 1.2 times higher than Dubai Marina itself, and in some cases, the rent-to-price ratio can be nearly double the market average. That sounds backwards, so the obvious question is why? The answer starts with location, because even though this area doesn't feel luxurious, it's strategically placed in a way renters care deeply about. Dubai Marina, JBR Beach, and Blue Waters Island are all just minutes away, which means residents still get access to the lifestyle without paying the marina price tag. Add to that a nearby metro station, and suddenly commuting becomes easy. From here, residents can reach downtown Dubai in about 26 minutes, which makes it viable not just for tourists, but for working professionals too. So while the buildings may be less flashy, the convenience stays high, and that combination is powerful. This is Jumeirah Lake Towers, or JLT, and affordability is its secret weapon. A ready studio apartment here averages around $200,000, roughly 25% cheaper than similar units in Dubai Marina. That price gap attracts 2 very different types of tenants at the same time. On one side, you have budget-conscious tourists booking short-term stays who still want to be close to the action. On the other, you have residents who work nearby and want affordable housing next to some of Dubai's most lively areas. But that's only half the story, and the other half is easy to miss if you only look at JLT as a residential zone. Because JLT is also a free zone specifically designed for commodities trading companies. That means firms dealing in gold, diamonds, and other commodities can operate here with significant tax advantages. And those companies bring people, a lot of them, high-income professionals who don't want cheap apartments but still want to live close to where they work. So while part of JLT caters to budget renters, another part quietly attracts demand for higher-end apartments. That split creates a rare mix where different property types serve completely different tenant profiles, and landlords benefit from both. To understand how well an area performs for rentals, we often look at the rent-to-price ratio, which is simply the annual rental income divided by the purchase price. It's not a perfect yield calculation because it doesn't account for expenses, but it's a strong indicator of whether an area makes sense for renting. And in JLT, the numbers are hard to ignore. Studios average around 8.5%, one-bedroom apartments about 7.5%, two bedrooms 6.6%, and even 3 bedrooms sit close to 6%. And those are averages. Some buildings significantly outperform them. One of those buildings was completed just 6 months ago. When you walk through JLT, you see lakes, high-rise towers, and a calmer atmosphere than Marina. It feels like a more affordable, more relaxed version of the same lifestyle. And then you come across a building like MB Royal, which proves that higher quality developments can push returns even further. The architecture might not be everyone's taste, but in investing, aesthetics don't matter nearly as much as performance. Investors who bought one-bedroom apartments in this building off-plan back in 2021 paid around $357,000 on average. At the time, that price was about 70% higher than the average one-bedroom in JLT, which made some people hesitate. But today, those same units rent for roughly $33,000 per year. That translates to nearly a 9.9% rent to initial price ratio, and that's exactly how smart investing works, because sometimes paying more upfront in the right building unlocks returns the broader market can't match. What makes this even more interesting is that more high-end projects are now being announced in JLT, some under major hotel brands. But here's the part you should pay attention to. The most attractive investment opportunity in this area hasn't even been officially announced yet. We expect it to go public soon, and when it does, it could shift how people view JLT entirely. And when that happens, the window for early investors won't stay open for long. But JLT isn't the only place quietly outperforming its famous neighbor. There's another neighborhood in Dubai that follows a very similar pattern, sitting next to a much larger, much more crowded area, benefiting from the same location advantages, but without carrying the same risks. And once you understand why that difference matters, you'll see why some investors are already moving their focus there before the rest of the market catches on. If you want a rental investment that actually makes sense on paper and in real life, April Properties can help. My team analyzes the numbers, filters out the hype, and matches you with opportunities that fit your budget and risk level. No pressure, no guesswork, just data-driven decisions. Click the link in the description, call, or WhatsApp us now to get a free consultation and see what kind of rental returns you could realistically achieve in Dubai.